What's up, guys? My name is Nick and welcome to the channel. In today's video, I'm going to be going over SCHD, one of the best dividend ETFs to own. It's called the Schwab US Dividend Equity ETF. But first, guys, we're going to go over my portfolio, and this is my passive income portfolio that I track every week. So if you want to follow along and see how a real portfolio performs, you can do so by subscribing to the channel and following along for free. So guys, right here we can see that in the last week, my portfolio was down $360.37. And however, I did earn $9.14 in dividends. And I actually want to show you guys the one day. I had a horrible day on Friday, lost $431.91. And that $1.20 dividend is from Apple. But let's scroll down and I'll actually show you guys how my portfolio did. The only green stocks were Microsoft and ADP. Then my trifecta pie was also green. But if we scroll down here, you guys can just see all the red. And if we get here down here to the very bottom, Clorox had a huge dip of 14.47% in the day. And that's because during the pandemic, a lot of people were going out and buying Clorox products to clean. So Clorox's revenue spiked, as did their share price. And now Clorox can't keep up with the pandemic demand, so their price is tanking. And however, that doesn't really faze me. I still believe in Clorox as a company. I think they provide an essential product. And as long as they keep paying their dividend, I'm going to hold on to them and buy more. So now let's go into my activity. What's happened in the week? So if we start here with January 31st, I received a $21.75 dividend from Good and a $7.68 dividend from LTC. And also on the 31st, I deposited $125 as I do every single week, every Monday. I consistently invest into my portfolio. And I had 7 buys on January 31st. So as you can see, my portfolio automatically bought Texas Instruments, Walmart, American Waterworks, Jeppy, Q Yield, Clorox, and Nusi. And then on February 1st, I had a $7.21 dividend from General Mills, $24.79 from Q Yield. And if you guys remember, last month I received that large $58 dividend from Q Yield. So now we're back to normal. As I said, the 24. And then I also received a dividend from Verizon of $14.95. Then on February 1st, I had 4 buys, and I picked up some more Clorox, some Kellogg's, Texas Instruments, and Walmart. And then looks like I had some more buys on February 2nd, which was American Waterworks, Clorox, Kellogg's, and Home Depot. And then on February 4th, I received a nice dividend from Jeppy of $12.54. So next up, just want to show you guys my dividend growth chart. And as you guys can see right down here, $59.49 for February 2022. If we scroll down, it's right there, which is absolutely insane to have almost $60 in just the first 4 days of the month. Because as you guys saw, my last dividend was Jeppy on the 4th. And if we look here, this number, 263, that's how much money I've earned in dividends for the first 3 months, the first quarter. And then this 8768 is the 263 divided by 3, showing my average monthly dividends earned from the first quarter of the month, first quarter of the year. Because as you can see, we're not even halfway through the second month, and I'm already closing in on $100 a month average. So for the last 3 months of 2021, I was averaging $145 in dividends. So I'm looking at the beginning of 2022 to have an increase in my average monthly dividends. All right, so here we have the Schwab US Dividend Equity ETF, SCHD. If I scroll down and look at the key data, we have a current price, $78.54, a solid dividend yield of 2.83%, a market cap of 32.31 billion, which means that this is a fairly large ETF, and then a beta of 0.95, which is under 1, showing that it has low volatility, which is great to see. And so SCHD, this investment seeks to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And to pursue its goal, the fund generally invests in stocks that are included in the index. The index is designed to measure the performance of high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers based on financial ratios. The fund invests at least 90% of its net assets in these stocks. And as I was saying, this is one of the best dividend ETFs to buy for income. And I'm going to show you guys just that right now. So if I go over to Seeking Alpha, you guys can see SCHD. The current year to date is negative 2.83%. However, SCHD tracks fairly close to the S&P 500. So if I go over to the S&P 500, you can see that it has a year to date of negative 5.53%. And if I go to the 1 year, the S&P 500 is up 16.19%. If I go back to SCHD, it's up 19.51%. And then what I also want to show you guys is the dividends, and specifically the dividend summary. Well, as you can see, the forward dividend yield is 3.16%, annual payout of $2.48. And then this 5-year growth rate, which is absolutely insane, 12.32%. That means, let's say we bump this down to just 12%, or let's just bump this down to 10%, make it easy. If they grew their dividend by 10% this year, you would take this $2.48 and add 24 cents to it. So let's see if I can do the math. That would be 2.68 plus 4, $2.72. And that's a really great growth rate. Like I said, it's insane. It's phenomenal. Just to give you guys a comparison, Costco has a 5-year growth rate of 11.91%, which means this SCHD is outgrowing Costco. And one more thing I want to show you guys is this dividend growth chart. As you can see, in 2017, as you can see, the dividend is growing significantly over the last 5 years. And if we look at right down here, the CAGR, you can see 12, 11.5, 11.88, all the way getting to 13.7, 16% growth in 2018, 14.21 in 2019. And as you can see, their growth did slow down a little bit during the pandemic in 2020, but 10%, 10.88, almost 11% is still phenomenal. And then I just want to show you guys the comparison with the S&P 500. If we go to their dividend chart and look, they have a dividend yield of 1.46%, which is fairly low. That's a little bit higher than a tech stock, but still significantly lower than SCHD. And if we look at their annual payout, $6.55, then their 5-year growth rate is only 4.73%, which is almost 3 times less than SCHD. Then if I go to their dividend growth, as you can see over the years, the chart has not moved up significantly. However, it did seem like they had a pretty good jump from 2018 to 2019. But other than that, as you guys can see, their growth rate has been tanking even before the pandemic. So that is the comparison between SCHD and the S&P 500. And now I want to show you guys the top 10 holdings of SCHD. And before I go into the holdings, ETFs like SCHD are a lot safer than owning individual stocks for the exact reason of this pie chart. As you can see, ETFs own a ton of stocks, and that gives them cushioning for if any one stock fails or performs poorly, they have so many other stocks to pick up the slack. And let's look at these top 10 holdings. We have Merck, Coca-Cola, Amgen, Verizon, PepsiCo, Pfizer, IBM, Broadcom, Cisco, and Texas Instruments. And they hold a weight of 40.83%. And these are all great stocks. Definitely Broadcom was on my wait list. I should have bought that stock. PepsiCo, one of my favorite stocks. And Texas Instrument, Pfizer, also Amgen, also solid companies. So as you can see, the SCHD lives up to its name of buying high quality companies that pay great dividends and increase those dividends by a lot. And I bet if you looked, I bet SCHD increases their dividend more than Texas Instruments. But you guys can check that out on your own. So next, I want to show you this website, Portfolio Visualizer, where I'm going to back test SCHD compared to some other funds. And as you can see, I started at 2011 because that's when SCHD started up to 2022. I put in an initial amount of 10,000 and we're contributing 1,000 monthly. And it's reinvesting dividends, and we're going to display income. And the portfolios that we're comparing to are SPY, SCHD, and VYM, which is the Vanguard Dividend Fund. And if I scroll down here to portfolio returns, you can see that with an initial balance of 10,000, SPY actually had the highest final balance of 333,000, but SCHD was just behind, about 7,000 at 326K. And then VYM performed the worst with 276,000. But if we go to best year over here, you can see that SCHD had the highest growth of 32.89%. However, it was also in the middle for worst year. And then if we look at portfolio growth, you can see SPY is the blue line, SCHD is the red line, and VYM is the orangish line. SPY and SCHD right there neck and neck. And then if we come here to annual returns, looking here, I'm going to go to full right here. You can see that SPY returned 15.68%. SCHD was just behind at 14.89%. And then VYM came in at the worst with 12.81%. And now this is what I find the most important, is the portfolio income. So as we've seen so far, SPY and SCHD track their performance pretty close. It is fairly close. But now let's look at the dividend income. Once again, SPY is blue, SCHD is red, and VYM is orange. So just starting off in 2012, SCHD had more income than SPY, but less than VYM. And as you can see over the years, it's growing. It's growing. And then 2019, SCHD surpasses VYM for income. And then they just shoot up. Looks like SCHD is going to the moon with their income, completely destroying SPY, having over double their income if you look at 2021. And that just goes to show you the compounding effect of having a 12.32% dividend growth rate, or CAGR. And so, guys, with that being said, SCHD is a great dividend ETF. They provide a lot of income with a high dividend growth rate plus solid capital gains. This is a stock that I've had on my wait list. I've wanted to add it to my portfolio. I just haven't. But now, after going over this video with you guys, all this information, I think it's time to reevaluate my portfolio, change some things around, and pick up SCHD. So guys, thank you for watching. Don't forget to like this video, comment down below because I'll be answering all your comments, and subscribe.